Well, thank you for joining us on the Market Day Report. I'm Marlon Bowling with you on a Monday as we're getting a brand new trading week rolling, and we're going to take a look at your opening trade on the grain side of things here, and we'll get a little expert commentary as well. Let's go to the corn board and see what the futures are doing right now. Okay, as we go to the corn, as it appears here, we're going to take a look first of all at that nearby May contract. It is still down. It's down 1.5 pennies, just kind of like what it was overnight. We're at 352.5, and we have December new crop 1 3/4 lower at 368. Soybean trade, we'll see how it's doing in the early going here. In the soybean trade, if we can pull up that screen, we have the May contract down 1/4 cent at 9.18. So now just a little bit of weakness. July is down 1/2 at 9.25.5, and you have your new crop November contract 1 tick lower, 1/4 cent lower at 9.32 per bushel. Now in the wheat trade this morning on the Chicago wheat, we have the May contract over there currently 2 1/4 lower at 473.5 per bushel, and July is down 2 3/4 at 480 1/4 per bushel. Meanwhile, in Kansas City, on the Kansas City May, we're up 1/2 at 478 1/4. July is up 3/4 now at 489 1/4 per bushel. On the spring wheat trade in Minneapolis, the May contract is unchanged at 529, no change at all. July down 3/4 at 537 1/4. Let's bring in Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. And Dewey, as we take a look at the open here on the grain trade, everything is fairly quiet on the home front.
Yeah, it definitely is. I think you got traders still looking at last week. They're looking at one another, scratching their heads and saying, now what? You got several things going on here. I think that the increase in corn acres to 93.6 being about 2 million or so above what the highest trade guess was is just a little bit excessive. You got to take in consideration that the rally in beans began in early March, and that is just when the survey was taken for the planting intentions. Beans have risen about 8%. Corn has risen about 5%. And I know if this price rise, we have got some lenders undoubtedly are probably twisting a few arms to get a few more bean acres planted. So we got a lot of things that are going on here, and like I said, traders are just scratching their head, looking at one another, saying, now what?
Well, it was interesting because in that prospective plantings report, the wheat acreage was down by about 2 million acres, while the corn went up about that much. But on the wheat, it was kind of a surprise that it would have been a bullish report. But is it just because we have such burdensome world supplies hanging over our head that the market cannot rally anyway?
I think that is it mostly. When you look at what we saw last week in the stocks report, yeah, on one side of the equation, you're looking at bullish acreage report. On the other side, you're looking at stocks as of March 1st up 232 million bushels. Only thing we've done in world stocks and wheat is maybe just put a little bit of a nick in the wheat that we're going to be looking at produced.
All right, well, Dewey, sit tight if you would. I want to bring you back here in a moment, and we'll take a look at livestock. In the meantime, let's take a look at our cotton trade as well, see what the futures are doing here in the early going this morning. Now, the cotton has been rebounding here in the last couple of days, and right now on the futures trade, we have the May contract up 18 points at 59.38 cents per pound, and we have July now 12 points higher at 58.96. So it's getting closer to that 60-cent level where we had been several months ago. So we'll keep an eye on that as well. Our special guest, Dewey Strickler of AgWatch Market Advisors. We'll be back talking more with Dewey about livestock when we come back. Back with you here on the Market Day Report. Thank you so much for joining us on a Monday. I'm Marlon Bowling with you. Our very special guest on the telephone right now, Dewey Strickler. He's with AgWatch Market Advisors. He's based in Franklin, Kentucky. And Dewey, as we look at the livestock trade, you know, we got things, kind of a cleanup trade that developed in the cash cattle market on Friday. It wasn't all that many head, but it seemed to be steady with what happened the day before. It looked like on a live basis, we had cash cattle bringing about 134, on a dressed basis, maybe 213 to 215. So that was basically steady with what we had the day before. But on the other hand, that was what, $3 to $5 lower than what we had the previous week. Is that right?
Yeah, something like that, Marlon.
So now, can you read much into that as far as direction for this week's activity? Let's go ahead and take a look at the live cattle futures and see what the first trades are here this morning on the big board. We'll go over there and take a look at that nearby April. We are up $1, Dewey, at 133.98 right now. June is up $1.18 at 124.75. This market, Dewey, has been perilously hanging on to that long-term uptrend line from December 17th, I believe it was. And it's kind of do or die, isn't it?
Yeah, it mostly is. I'm a little surprised that the live cattle are up here this morning just because, cash was down. And we got some cooler temperatures in the forecast that could temper some demand as far as grilling is concerned. Box beef was down for the week. This may be nothing more than just a dead cat bounce.
Really? Okay. Now, do you read much into the fact that some analysts said that we were going down and testing some retracement levels on the charts, and that may offer some support today? Do you read much into that?
You might see a little support in the 122.5 area basis of June contract. I mean, if we got down below that, no, I wouldn't really be surprised at all.
All right. Now we can take a look at our feeder cattle futures and see how they're doing so far today. And the early going live cattle are gaining $1. Right now on the feeder cattle, well, they're being led by the nearbys. April up $1. We have May now up $1.22 at 155.92 per hundredweight. Now the deferreds are 50 to 80 cents higher. So I guess, Dewey, some traders would say that is probably a good sign if the front end months are leading the way higher, wouldn't it?
Yes, you do have a little bit of an inside trading day going on here on the May contract of feeders. I think that when you look at the chart from longer-term perspective, since last year, we've been in nothing more than just a big, broad trade range on the feeders, and that's likely where we're going to stay. Okay, let's bring up the lean hog trade and see how it's starting out today in the early going. On the lean hog futures, wow, mixed bag. April lean hogs down just 2 cents at 67.78 per hundredweight. The May, though, is 30 higher at 75.80. But from what I understand, Dewey, most of the volume action is in June, and that's down 3 cents at 79.35 per hundred right now. Yes, and the thing I would be concerned about hogs, two issues right now. One, we got some increasing weights. Two, we have the funds holding some hefty long positions. So that being said, you could possibly be looking at the June hogs working back lower to about the 78 area, maybe down in the 77 range. Really? Okay, we'll keep our eye on that. And I know we did do a little chart damage last Friday as well. Last week was not a good week for the hogs. Dewey, thank you so much. Appreciate that. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. So, Janet, so far it's just steady as she goes on the hog trade. Cattle actually looking pretty good right out of the gate today.
Out of the gate so far.
Out of the gate, yeah.
Thank you, Marlon.